the Property Pod. Welcome to the Property Pod with Moneyweb. The property sector is an ever-changing sector. And in this podcast series, your host, Suren Naidu, chats to movers and shakers in the property industry.
Hello and welcome to the Property Pod, South Africa's premier property investor podcast, right here on Moneyweb. On the latest pod, we have a CEO who's been on our pod before and much sooner than I thought to having back on the show. And it's about latest developments at a company called Dipula Properties, which had quite a significant announcement last week. I'm not going to share just yet what that announcement was, even though it's already out there in the market. Now, Isaac Peterson is the CEO, and he's joining us on the show from Johannesburg. Isaac, welcome back to the Property Pod.
Thank you, and thanks for having me. Hopefully we have a good discussion today. Thank you.
So, Isaac, what am I talking about, or should I share that highlight for you? Because I'm sure you've been working on trying to get this for a while.
Yeah, obviously, you referred into the index inclusion that happened on Monday for ourselves and two other counters, and it's been a long time in the making. We engaged with the JSE extensively over the years, and for one or other technical reason, we kind of always missed the index. I mean, the pull-up made its debut in the index many years ago, and then we dropped out. And I think when we dropped out, it became very difficult for us to get back in there. It wasn't really a size thing because, I mean, market cap wise, we're not the smallest breed out there. There are REITs that have lower market caps than us. It was just technical reasons that we couldn't actually make it into the index. It was actually quite difficult to make it into the index, but it's very difficult to fall out the interest out the index in a way that the JSE actually looks at how they do those indexes. It's for all these reasons. I think market participants need stability in terms of how the index works and that sort of thing. But what does it mean for us? Basically, we're now on the radar of the entire market because we're in the all-share index, we're in the property indexes. And typically, your mandates are granted, particularly for institutional investors, not so much, high net worth individuals or retail investors, but for institutional investors, they've got certain, limitations in terms of what you can or cannot invest in. And then they've got things like tracking error, that sort of keeps you on a straight and narrow in terms of not investing too far out or taking too big bets on specific stocks in a manner that might actually lose investors' money. So with our inclusion, obviously, if you're in the index, many investors would be compelled to hold your stock in some shape, form or the other. And obviously, investors look at overweight and underweight positions. But if you completely out the index, I mean, they can't even actually really do that with you. And we're hoping that besides just being on the radar of so many investors now, that obviously that should improve our liquidity and make us more investable. So very exciting time for us.
What happens now, though? Are you going to be interacting more from an investor relations perspective to kind of highlight the value of investing in Dipula, or are these institutional investors already talking to you?
Yeah, many of them have been investing in our stock for a long time, but obviously many of them could not invest in our stock for the reasons I've just explained. So now I think it's more a question of definitely getting a message out there more broadly than what we've done. We're also hoping that the sell-side analysts will start covering our stock, because obviously if you're not in the index, because of the sort of lack of trading your stock, it's not worth sell-side analysts' time, because they get paid by a number of trades that they process on behalf of investors. So with our inclusion now, we're hoping that perhaps the analyst will have more than one analyst house covering our stock, because at the moment we've only got one house covering our stock. With more coverage, more of the message will be out there. And I think you'll also see that in terms of just like attendance to some of our activities around investor relations. Many institutions will attend that previously did not attend. In fact, we were in Cape Town on Monday at quite a big investor showcase hosted by one of the sell-side analysts. And we saw something like, I think it was about 35 institutional investors there on almost like a speed dating thing, where they come into a room, they see you for an hour, and then they walk out and they go to other companies. So we were there with many other companies, not just property companies. So the guys would actually compare the story and compare us and see and decide for themselves whether it's compelling to invest in ourselves. So, I mean, that showed us that, out of the 35 that we saw, I think there were only 3 that were already invested in Dipula. So it's an exciting time for us.
So in terms of your previous inclusion in the index, I didn't realize that Dipula was included. You say, when was that?
Probably about more than 10 years ago. But it was a really short stint. I think one of the things that worked against us, Suren, if you recall, was that when we listed our fund or the company, we had a 2-tier share structure. So we had an A and a B shares. So the A and B share structure only split our market cap into, it was roughly a 60-40 sort of between the A's and the B's. So individually, it was actually quite small, but combined, obviously, the market cap was reasonable. So the component that made it shortly into the index was the B share, because I mean it ran quite hard, and I think kind of at that time ticked all the boxes. So we went in. I can't even remember. I think we were out in about 6 months, whatever. But I think we're going to be in there for forever now, and hopefully that reduces our cost of finance. Our share price runs, means cheaper money for us to execute on our exciting pipeline going forward. I think with interest rates having fallen about 150 basis points since September 2024, that in itself has given the sector good breathing space, and you can see that sector, our prices as a whole on the sector has actually improved significantly from, say, 2 years ago. Dipula itself was one of the top performers last year, and basically, that we actually made the Sunday Times top 100 companies, and we occupied top spot there. And the share price has done very well since then. And I think that this sort of stability now, the inclusion in the index, and hopefully interest rates stay stable, is going to be great for our existing investors. And it's also it's a great prospect for those that are still to come into Dipula.
So the SARB made the interesting decision for March to hold rates. Are you hopeful that it will stay the same for the rest of the year, considering what's happening in the Middle East and the pressure around inflation, not just in South Africa, but globally? We see the fuel prices set to jump on Wednesday.
Yeah. Wish I had that crystal ball. But look, I mean, if you look at what the financial markets are telling us, financial markets are basically saying to us massive heightened volatility. You look at FRAs are trading at 1% higher than where they were in the beginning of the year. And FRAs are kind of pricing in an increase in interest rates. The swap curve has changed quite significantly from where it was trading below about 30 basis points on 2 to 3 year 10 years below JIBOR. Now it's trading at about 60 basis points above JIBOR. So it's a whole percent up in terms of how people are looking at short-term potential interest rate increases. But of course, consensus is that, interest rates will probably stay stable for the remainder of the year. And then hopefully, by the end of this year, Middle East situation has calmed down and sorted. And if that happens, remember, all central banks were actually in the era of sort of decreasing interest rates because inflation was in check throughout the world. Actually, ECB, the Feds, everywhere. I mean, we started this year very excited about the prospects of a 25 to 50 basis point interest rate drop. And obviously that has changed the past 2 weeks or so. But I mean, my view is that Middle East stabilizes. Maybe we're back there again where, the swap curves inverse again and basically the market starts thinking, or Reserve Bank starts thinking about dropping. That's needed. I mean, economic growth has been slow. Our inflation is in check. And I mean, there's been massive deflation in some parts of that basket. I mean, look at food. Any retailer that comes out and, that's in the food business, publishes numbers, they talk about deflation rather than inflation. So if you're sitting in a situation where prices are not that hot, interest rates should actually be going down instead of up. So yeah, we welcome the holding, but we'd have been more excited about the drop in interest rates, to be honest with you. But we're also quite happy that it didn't go up.
Before you go, Isaac, I know you can't talk about results or performance because the company is in a closed period, but any other current highlights around share price or sentiment in the market, more from your operations, the local operations, because you operate in a part of the market that's still doing very well. A lot of township and rural retail form parts of your multi-billion rand portfolio.
Yeah, look, we're still seeing massive leasing opportunities, particularly in retail and industrial. Offices in the north of South Africa are obviously still a bit of a challenge, but they're really a small component of our business. Our exposure in income terms about 14%. And basically, if you take the vacancy factor for our offices and you look at it relative to the entire portfolio, it's a small fraction of it. So our performance will continue to be driven by industrial and offices. And I think we've indicated to the market how things are looking going forward. And we hold by those numbers, and we're excited, and hopefully we do even better than that.
Isaac, we would have to leave it there. That was Isaac Peterson, the CEO of JSE-listed Dipula Properties.
Thanks for listening to the Moneyweb Property Pod with Suren Naidu. To listen to more episodes, go to moneyweb.co.za or the Moneyweb app and follow Moneyweb News for daily updates. Follow Suren on Twitter @Suren Naidu for more of his property industry content and other business stories. The Property Pod.